Welcome to part 5 of our series where we are looking at accounting for journalizing for a company. And in our previous video, we started to balance our cash account. We would have totaled the discount allowed and discount received. And we recognize that the balance for our bank is carried down on the debit side. So therefore, on the 1st of August, so August 1st, the balance brought down would be on the credit side of $609.30. And then for our cash, the balance is carried down on the the balance is carried down on the credit side. So therefore, that balance will be brought down on the debit side. So that will always be on the debit side for cash. So August 1st, balance brought down, cash $450. So we balance our bank and our cash account in the cash book. We balance those. And now we are going to go on to our journals. So our journals, that are sales journal. Oh, we didn't record the return. The return for Carol Smith on the 15th has to be recorded in the sales return journal. So this is the transaction on the 15th for the return. So this is 15th of July. That is Carol Smith. We would have recorded the payment that she made, but we didn't record the return. It's $150. So now we come to our journals. We are going to total our journals. So that's what you do with your journals. You total your journals. So here, you're going to go right ahead and we are going to total our journals. So the total for our sales journal is $1,595. And then what we will write here is total credit sales to be transferred to the sales account So this is our total credit sales that will be transferred to the sales account for the month of July, and the sales account will be found in the general ledger. So that's where we are going to transfer this total. The individual amounts will go to the individual accounts for each person in the sales ledger, but the total will go to the sales account in the general journal. So we're going to total for our going to total for this as well. Purchases journal. So the total for the purchases journal is $1,686, and this is the total credit purchases to be transferred to the purchases account. And again, these will be in the general ledger as well. Although it's only one for the purchases return, we'll still do our total, and we'll say total purchases returns to be transferred to the purchases return account. So we will say this. The reason why we are stating these things here is because that we want to be mindful of where we are transferring these totals to, which accounts we want to be putting these totals into. So for our sales return, although it's one, we total. So total sales returns to be transferred to the sales returns account. And these accounts are found in the general ledger. Okay. So we've totaled all of our journals. We total our discount columns, we balance our cash and bank, we total our sales return, purchase return, and sales and purchases journal. So now we are going to leave off our question because we don't need a question anymore. We would have already journalized. So we're going to leave off our question. And we are going to now use our ledgers. We're going to be posting our transactions from the books of original entry. So we're going to be posting our transactions from the general journal, the cash book, the sales journal, purchases journal, sales return journal, and purchases return journal. We are going to be posting those transactions from those journals to the ledgers. So the first ledger we are going to be looking at is called our sales ledger. And the sales ledger contains all the personal T accounts for your credit customers only. So only credit customers will be found in your sales ledger. So what we do is that we'll go to the general journal first and look for our credit customers who are our debtors or accounts receivable. So we have Carol Smith and Catherine Hope. So we are going to enter for them first in our sales ledger. So we're going to put Carol Smith's account and Catherine Hope account. And then what we are going to do with these accounts is that the first thing, just like cash and bank, where we recorded the opening balance for cash and bank in the cash book, we are going to record the opening balance for Carol Smith and Catherine Hope, because this is the amount that they would have owed LSL Plc at the beginning of July. So you want to show in their account the amount that they had owed. So that would be 2013. And it is balance here. This is July, 1st of July. Balance brought down, and the balance brought down for her is 475. And then for Carol Smith, 1st of July, Catherine Holt, the balance brought down is 642. So you put in those balances. Then, so those were the ones that they had before. So if you want to know if they had any new customers, you go to the sales journal to see if they had any new customers. So in the sales journal, we have another customer called Jennifer Johnson. So we're going to have an account for Jennifer Johnson. So now we are going to look to post our transactions. Now, when we look in the general journal, we do not see any other transactions relating to Carol Smith, Catherine Hope, or Jennifer Johnson. but we have to go to the sales journal to see if there are transactions. So there's a seal in the sales journal. There is a credit seal for Carol Smith on the 2nd of 6/50. So we go to her account, and on the 2nd, so the 2nd of July, sales 6/50. And for Jennifer Johnson, there is a seal of $9.45. So her account is debited for that $9.45. So you go to Jennifer Johnson on the 2nd of July, sales $9.45. So we record in from the sales journal. And what we also need to do is to look at the cash book to see if we receive any money from any of the customers. So we see here on the 1st of July, we would have received a check of $304.95 from Catherine Hope, and the discount allowed was $16.05. So here in the cash book, bank is debited for $304.95. So Catherine Hope account will be credited for $304.95. Here, the discount allowed column is debited for $16.05. So Catherine Hope's account will be credited for that $16.05. So let's go to Catherine Hope. And that is on July 1st. So 1st of July, bank, $304.95. And then on July 1st, discounts allowed, $16.05. So that's Catherine Hope. And here on the 15th, we see that Carol Smith also made a payment. So we received money from Carol Smith, a check for $945.75, and the discount was $29.25. So we are completing the double entry. So bank is debited for $945.75, and discount allowed debited $29.25. So we'll go to her account and enter those as credit entries. So and also we would have had, with respect to Carol Smith, when she made this payment on the 15th, she would have also returned items. So before she actually made the payment to LSL Plc, she would have returned $150 worth of goods. So we're going to record that as well. So the 15th of July, sales returns, $150. And then on the 15th of July, there was a bank payment of $945.75. And then also on the 15th of July, there was a discount allowed of $29.25. Okay, so that is what we have there. So this is Carol Smith and Catherine Hope. When it comes to Jennifer Johnson, there were no other transactions relating to Jennifer Johnson. She did not return any item, neither did she make any payment. So that is Jennifer Johnson. So when we come back, we are going to be looking at our purchases ledger, and we're going to record our transactions for our creditors. So please like this video and subscribe to the channel, and you can make any comments with respect to anything you do not understand.